The discussion surrounding cryptocurrencies, particularly Bitcoin and precious metals such as gold and silver, has evolved from skepticism and resistance to a growing recognition of their interconnected roles in the future of finance. Initially, Bitcoin was perceived by many as a speculative asset with little long-term viability, while gold and silver remained firmly entrenched in their roles as safe haven assets and reliable stores of value. However, the past decade has seen a remarkable transformation in the perception of Bitcoin, and now it is regarded by many investors and institutions as both a potential rival and a complement to traditional precious metals. This script provides an in-depth exploration of how Bitcoin, gold, and silver can coexist and thrive together in a rapidly changing financial landscape. To understand the evolving relationship between Bitcoin and precious metals, it is essential to first examine the historical context of these two asset classes. Gold and silver have been the backbone of wealth preservation for centuries, with gold being used as a currency for thousands of years. Their role in the global economy is deeply ingrained, providing a measure of stability and security during times of economic crisis, inflation, or geopolitical turmoil. Central banks and governments hold vast reserves of gold as a way to back their currencies and maintain trust in their financial systems. Throughout history, both gold and silver have weathered the storms of wars, economic recessions, and currency devaluations, proving their resilience and ability to maintain value over time. In contrast, Bitcoin is a much newer phenomenon, created in 2008 by an anonymous figure known as Satoshi Nakamoto. Bitcoin was initially seen as a radical experiment, a decentralized digital currency that existed outside the control of central banks and governments. In the early years, Bitcoin was mainly used by tech enthusiasts and a niche community of libertarians who believed in its potential to disrupt traditional financial systems. However, as the blockchain technology that underpins Bitcoin began to gain traction, the digital currency started to attract attention from institutional investors, governments, and financial regulators. Today, Bitcoin has become a global asset, with its market capitalization reaching into the trillions, and its volatility has drawn both investors and critics alike. The idea of Bitcoin and precious metals working in tandem may seem paradoxical at first glance, as they are often seen as competing assets. However, a closer analysis reveals that both can serve complementary functions in a well-diversified investment portfolio. While gold and silver are traditionally seen as safe haven assets that provide stability during times of economic uncertainty, Bitcoin offers the potential for higher returns due to its relative novelty and the increasing demand for digital assets. Bitcoin's unique characteristics make it particularly attractive in a world where central banks are engaging in unprecedented levels of monetary stimulus. The Federal Reserve, the European Central Bank, and other major central banks have engaged in practices such as quantitative easing, which involves the injection of vast sums of money into the economy. While this has been effective in the short term at stabilizing financial markets, it has also raised concerns about long-term inflation and the devaluation of fiat currencies. As a result, many investors have turned to assets like gold and silver, which have historically been seen as a hedge against inflation. Bitcoin, too, has emerged as a potential hedge against inflation and currency devaluation. One of Bitcoin's defining features is its capped supply of 21 million coins, which is programmed into its code. This scarcity factor mirrors the finite supply of gold, which has also been a key factor in its value proposition over the centuries. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin's supply is fixed, making it immune to inflationary pressures that arise from excessive money printing. As such, Bitcoin is often referred to as digital gold, with many analysts predicting that it will play an increasingly important role in global financial systems as both a store of value and a medium of exchange. The idea of Bitcoin as a complement to precious metals is further supported by its growing integration into traditional financial markets. Over the past few years, Bitcoin has seen increased institutional adoption, with companies like MicroStrategy, Tesla, and Square adding Bitcoin to their balance sheets. Additionally, financial institutions such as Fidelity, Grayscale, and PayPal have facilitated access to Bitcoin for both institutional and retail investors. These developments signal that Bitcoin is gradually becoming an accepted asset class alongside traditional investments like stocks, bonds, and commodities. One of the most fascinating developments in the relationship between Bitcoin and precious metals is the growing interest from governments and central banks in Bitcoin as a potential reserve asset. This shift reflects a recognition that Bitcoin's decentralized nature and its finite supply make it an attractive alternative to traditional fiat currencies, which can be manipulated by governments through monetary policy. The concept of a strategic Bitcoin reserve is gaining traction, with several countries already exploring the idea of incorporating Bitcoin into their national reserves. Senator Cynthia Lummis's proposal to build a U.S. Bitcoin reserve is a significant step in this direction. Lummis, a vocal proponent of Bitcoin, has argued that the United States should follow the lead of countries like El Salvador, which has made Bitcoin legal tender and is using it as a reserve asset. While the idea of a Bitcoin reserve is still in its early stages, it highlights the growing recognition that Bitcoin is not just a speculative asset, but a legitimate store of value with the potential to play a key role in the global financial system. Governments around the world are also becoming more involved in the regulation and adoption of cryptocurrencies. China, for example, has banned cryptocurrency mining, but is simultaneously developing its own central bank digital currency, CBDC, known as the digital yuan. This move reflects China's desire to control digital assets, while also recognizing their potential to reshape the global financial landscape. Other countries, such as Switzerland and Germany, have adopted more crypto-friendly regulations, creating a favorable environment for businesses and individuals to invest in Bitcoin and other cryptocurrencies. As more governments consider integrating Bitcoin into their reserves, it could lead to a situation where Bitcoin, gold, and silver all coexist as key pillars of national wealth. This would create a multi-asset reserve system where digital and physical assets work together to provide stability and security. For example, a country might hold Bitcoin as a hedge against inflation and currency devaluation, while also maintaining gold and silver reserves as a hedge against geopolitical instability. The integration of Bitcoin into government reserves and the broader financial system has significant geopolitical implications. As countries like El Salvador, Bhutan, and Ethiopia embrace Bitcoin mining, they are positioning themselves to take advantage of a global financial system that is becoming increasingly digital and decentralized. These nations, many of which have abundant natural resources like geothermal energy or hydroelectric power, can use Bitcoin mining as a way to build an economy around a globally recognized asset while leveraging their energy resources to create value. This trend is particularly important in the context of global power dynamics. Countries with large Bitcoin reserves could gain a strategic advantage in the future, as Bitcoin becomes an increasingly important asset class. Bitcoin's decentralized nature means that no single country or institution controls its supply, making it a more democratic and accessible store of value than traditional assets like gold. This could lead to a shift in the global balance of power, with countries that embrace Bitcoin gaining influence over those that remain reliant on traditional reserve assets, like gold and silver. Moreover, the widespread adoption of Bitcoin could have profound implications for the future of the global financial system. Bitcoin's decentralized and borderless nature could challenge the dominance of traditional financial institutions, such as banks and central banks, which have historically controlled the flow of money and credit. In a world where Bitcoin is integrated into the global financial system, individuals and businesses could bypass traditional financial intermediaries and transact directly with one another, reducing the power of central banks and government regulators. Looking ahead, the relationship between Bitcoin, gold, and silver is likely to continue evolving. Bitcoin's growing role as a store of value and hedge against inflation makes it an increasingly attractive option for investors, but gold and silver will continue to play an important role in the global financial system for the foreseeable future. These metals have a proven track record of maintaining value over time, and they offer a level of stability that Bitcoin, with its volatility, cannot yet provide. In the long term, we may see a scenario where Bitcoin, gold, and silver coexist as complementary assets, each serving a different function within a diversified investment portfolio. Bitcoin could be used as a high-risk, high-reward asset that offers the potential for significant returns, while gold and silver provide the stability and security that investors seek in times of economic uncertainty. In conclusion, the relationship between Bitcoin and precious metals is complex and multifaceted, but it is clear that these assets are not mutually exclusive. As the financial landscape continues to evolve, Bitcoin is likely to play an increasingly important role in the global economy, both as a store of value and a medium of exchange. At the same time, gold and silver will continue to serve as reliable stores of wealth, providing a hedge against inflation and geopolitical risk. Together, Bitcoin, gold, and silver represent a new paradigm in wealth preservation, one that blends the best of both the digital and physical worlds.